If you had $1,000 right now, would you risk it to make $200 or protect it to never lose it? That single decision is what separates amateurs from how Wall Street actually thinks. Most people chase gains. Smart money protects the downside first. And that one shift changes everything. Right now, someone with the same income as you is growing faster, not working harder, just making better decisions. Why? They're not guessing. They're using a mental model most people never learn. In this video, I'll break it down simply: how to think in probabilities, avoid costly mistakes, and make money moves that actually compound. And the first rule? It goes against everything you've been told about making money, and that's exactly why it works. Most people look at money like a yes or no game, but on Wall Street, it's all about odds. They don't ask, will this make money? They ask, are the odds in my favor over time? That shift alone changes everything in personal finance and financial psychology. Instead of chasing guaranteed paychecks, they stack small advantages that compound. That's one of those finance tips nobody tells you early enough. Think about it like Moneyball. The team didn't chase star players, they chased probability and data. Same thing with how to make money in real life. Instead of betting everything on one job or one big move, you start looking at patterns. Which skills are in demand, which side hustles have traction, which investments historically trend upward. That's financial education in action, not theory. A practical move? Someone might test 3 income streams at once: freelancing, investing in an index fund like S&P 500 ETFs, and learning a high-income skill like copywriting or coding. Not all will hit, and that's the point. When you think in probabilities, failure stops being personal and starts being part of the system. That mindset alone reduces fear and increases action. Over time, those small bets start revealing something powerful: patterns of what works for you. And once someone sees those patterns, they realize something deeper: winning isn't about guessing right, it's about positioning smart. But here's where it gets interesting: what happens when the risk is real and the downside could actually hurt? That's the next shift most people completely ignore. Most people jump straight into how to make money, chasing upside without thinking twice about what they could lose. But on Wall Street, it's the opposite: they obsess over protecting the downside first. Before any move, the real question is, if this goes wrong, can I survive it? That's a core principle in financial psychology that separates amateurs from pros. Think about The Big Short. The guys who won weren't just lucky, they understood risk better than everyone else. They saw what could break before it actually did. In personal finance, that looks like building an emergency fund covering 3 to 6 months of expenses, avoiding high-interest debt, and never risking money you can't afford to lose. It's not boring, it's strategic. A practical example: before investing $1,000 into stocks or crypto, someone makes sure their bills are covered, they've got cash reserves, and no toxic debt draining them. They might choose safer assets first, like index funds or dividend-paying stocks such as Coca-Cola or Johnson & Johnson. That's not playing small, that's building a foundation that lets you play bigger later. And here's the part most people miss: when your downside is protected, your mind gets sharper. You make better decisions, take smarter risks, and stop acting out of fear. That's when growth actually accelerates. But once your foundation is secure, the real question becomes, are you even allocating your resources the right way to grow? That's where things start to shift even more. Most people treat money, time, and energy like separate things, but the truth is, they're all capital. On Wall Street, every dollar has a role, and in real life, it's no different. If someone dumps 100% of their energy into just a job, they're overexposed without even realizing it. Smart personal finance starts when you see your life as a portfolio. Think about Iron Man. Tony Stark didn't rely on one suit, he built multiple versions for different situations. That's exactly how money habits should work. Someone might allocate 60% of their energy to stability, job, bills, 30% to growth, learning skills, investing, and 10% to asymmetric bets, business ideas, side hustles. That balance is what creates long-term leverage. A practical move? Instead of spending all free time scrolling, someone invests 1 to 2 hours daily into a high-income skill like sales, coding, or digital marketing. At the same time, they automate investments into ETFs like VOO or QQQ, while testing a small side hustle like freelancing or content creation. That's how to make money across multiple lanes without burning out. And here's where it gets real: when your capital is diversified, you stop depending on one outcome to win. That alone reduces stress and increases opportunity. But even with the right allocation, there's a hidden trap that quietly destroys progress for most people, and it has nothing to do with money itself. Most people say they want better personal finance, but they're making money decisions based on vibes. On Wall Street, that doesn't fly. Everything is tracked, measured, and reviewed constantly. The difference isn't intelligence, it's clarity. When you actually see your numbers, your financial psychology starts to shift fast. Think about Breaking Bad. Not the crime part, but the precision. Every move Walter made later in the series was calculated, tracked, and adjusted. In real life, someone serious about financial education tracks income, expenses, and savings weekly. Apps like Mint or an app, or even a simple spreadsheet, can expose patterns most people ignore. A practical move? Someone reviews their spending every Sunday for 15 minutes. They categorize expenses, cut one unnecessary cost, and redirect that money into investments or savings. That one habit alone can increase savings rate by 10 to 20% over time. These small finance tips sound simple, but they compound into serious control. And here's the shift: once the numbers are clear, anxiety drops because uncertainty disappears. You're no longer guessing, you're adjusting. But even with perfect data, there's still one thing that can sabotage everything in a second, and it's not what most people expect. Most people wait for one big break, but on Wall Street, it's never about one move, it's about small edges repeated over and over. A 1% improvement doesn't sound sexy, but stacked over time, it changes everything. That's the core of powerful money habits and real financial psychology. Wealth isn't built in moments, it's built in patterns. Think about the social network. It wasn't just one genius idea, it was constant iteration, small improvements, and relentless focus. In personal finance, that looks like increasing your savings rate by just 1%, negotiating a lower bill, or improving your income slightly. These finance tips seem small, but they compound like crazy over time. A practical move? Someone saves an extra $5 a day and invests it into an ETF like VTI with an average 8% annual return. Over 10 to 15 years, that alone can turn into tens of thousands of dollars. Now add learning a high-income skill like copywriting or tech sales, increasing income by even $500 a month. That's how to make money through small, consistent upgrades. And here's where it gets dangerous, in a good way. Once you realize how powerful small edges are, you stop chasing shortcuts and start building systems. But even then, there's one internal factor that can still ruin everything, something most people tie too closely to their results without even noticing. Most people tie their self-worth to money, and that's where things start to break. One bad decision, one failed investment, and they feel like they failed as a person. But on Wall Street, losses are expected, they're part of the game. What matters isn't the loss, it's the response. That's advanced financial psychology most people never develop. Think about billions. The top investors don't panic when they lose, they analyze, adjust, and move on. In personal finance, someone might lose money in a stock or a failed side hustle. Instead of quitting, they review what went wrong, refine their strategy, and redeploy capital smarter. That's how to make money long-term, by staying in the game. A practical move? After any financial mistake, someone writes down 3 things: what happened, why it happened, and what they'll do differently next time. This simple habit turns losses into data. Over time, those lessons become an edge. That's how strong money habits are built, not by avoiding failure, but by using it. And here's the shift: when you detach emotionally, you start making cleaner, sharper decisions. Fear stops controlling your moves. But there's one final principle that ties all of this together, and it's been around way longer than Wall Street itself. Most people want more money, but they haven't learned how to manage what they already have. In financial psychology, this is where everything either grows or breaks. The principle is simple: money expands in the hands of someone who can handle it. That's not just a finance tip, it's a timeless law of personal finance. Think about the parable of the talents in the Gospel of Matthew. The servants who multiplied what they were given were trusted with more, while the one who did nothing lost even what he had. It's similar to the pursuit of happiness. Progress didn't come from luck, it came from discipline, consistency, and stewardship. That's real financial education in action. A practical move? Someone starts managing even a small income like $500 with intention, tracking every dollar, saving a portion, investing consistently, and avoiding emotional spending. Over time, those habits create trust, with themselves and with opportunity. That's how to make money grow, even from small beginnings. And here's the deeper truth: when someone proves they can handle small amounts wisely, bigger opportunities naturally show up. More income, better deals, stronger networks. But now that all the pieces are on the table, the real question is, how do you connect all of this into one system that actually works fast in real life? Everything comes down to this: will you keep reacting to money, or will you finally start controlling it? You've seen how powerful these shifts are: thinking in probabilities, protecting your downside, building intentional money habits, and using real financial psychology to guide decisions. This isn't theory anymore, it's a system. And if you apply even a few of these finance tips, you'll start to notice something different. Your money stops slipping away and starts working for you. Now here's the real question: are you actually going to use this, or just move on like most people do? Because the truth is, financial education only works if you act on it. So take a second, commit to one change today, and start building momentum. And if you're serious about changing your life, hit that subscribe button and turn on notifications, because the next insight you learn might be the one that changes everything. Remember how it felt at the beginning: confused, maybe a little overwhelmed, unsure why money never seemed to stick? Now you see the pattern. You're not stuck, you were just missing the system. And once you start applying these habits consistently, you're no longer guessing how to make money, you're building a life where your financial decisions actually make sense. And if you're ready to take this to the next level, there's something that can help you move faster. The Material Holistic Health, Nourish Your Mind, Balance Your Finances, Transform Your Life shows you exactly how to build multiple income streams, eliminate debt step by step, and stay mentally sharp under financial pressure. Click the link in the pinned comment now and start transforming your finances today. It's your time. Check out the material in the pinned comment.